What's up, folks? Honey's Sunday update. Anyway, we're going to start this TPO chart back in August of last year, 17th, 18th, 19th, 20th, to look for levels for upside here. We tapped at 27. I'll go back to that in a second. But upside target, if we get north of 87, 55, 58 could be. But I'm really looking at this 80. 78, 80 level, 88 possibly. My line in the sand upside is 43.09. That would be the ultimate target. If we got there, then I think that would probably be the end of the squeeze if we continue to go up. Anyway, so I'll show you why that 309 in my mind is important, but I still need to get past that 79, 80. And then you have that 55, 58 level. So we'll go back to Friday here. We had our spike up to 27, which was a level I've been watching for a while. We hit that. We stayed there for a while at that kind of this level here. Okay, a few hours. And then we dumped back and we leveled off down in the 4200 level. 4215 is going to be 4215, 4218. That's going to be the resistance I have because we closed down here just below the 4200. So yesterday, Friday low 191 is going to be something I watch out, and then we get him back into that 70 level, and then back into all the thickest shit right here. So that's kind of what I'd be watching. Downside, definitely 70, and then back into the 55, 50 level, which gets us into a crunch. But I mean, look at all these closes here. So 4112 is still largely important, and then even this 20 level here is largely important. But I mean, look at all of the opens and closing. There's so much volume and importance right here. So if they can hold it above this general area, then I will stay in, bullish posture. If we get back down or into this level, especially at a failed attempt up, then I think that's going to be bearish. But we'll have to see where tonight's open. It's 11:15 a.m. on Sunday. Pivots 97.33, 52 is perfect. 88 again, I like that one as well. 41.79, 41.43, and 41.24. So we'll take it out. Those pivots look decent for Sunday into Monday. Here's your 27. This was the volume node I've been watching for a while, and it just tapped it, taparoo, and then came back down. So not only did we come back down, we did close below the 4,200, 3,800 zone. So technically, we're back into this area of Groundhog Day. 43.28 was this high. So this was back in that August, those August levels we were just watching. But on the weekly, the 41.55, which is your 50 retrace from this high, 42.0 whatever 8, all the way down to your 35.05 low. These are the retracements from that. So we've been hanging out at the 50% retracement at 41.55, and 43.09 is your 38.2 retracement. So that would be my ultimate target if we were, look at that volume, to pop up above. Unless this is just a false, and then we come back down. Again, this is the weekly chart. I always keep that 200 day on the weekly chart just because it seems to hold macro down spikes. So typically we would come back down. That would be my 37.84 would be my target if we, if everything died and we went multiple limit down, whatever. But that's just kind of a more macro. This is obviously a weekly. It's going to be more of a macro chart. But that 43.09 is going to be very important. So if we were to continue up to squeeze up, that's going to be my ultimate target. Come Sunday night, I don't know. We have all of our debt ceiling talk and everything else, and I think I actually think that an acceptance of that is going to be more bearish than bullish, but that's just my theory. Euro has sustained below this trend line. We'll see if that continues down. It did have a nice pop on Friday. We chewed into that cash gap from August of last year, because that's where our targets are now, into it a little bit. 42.28 is still that target. So SPX 42.28 would also be an upside target to finish that and then reverse back down and come back and revisit all this stuff or get back into Groundhog Day. So I don't know. Now, if we wouldn't have stopped at that 22.27 level ES, I would assume that they would have filled that. If they would have filled that, I would have been more bearish, because that's actually cleaning up that action, and then typically we can reverse down and come back down. The fact they left a lot of that unfinished is curious to me. So we will see. Economic front. Bullard at 8:30 a.m. That's sweet. 11 a.m. is daily, and then I don't know, Bark and all these people, right? So we're gonna parade those people out. Tuesday, more speakers. PMI, we'll see if that. New home sales, which have been fairly decent. Waller speaks on Wednesday. Then we have the minutes, so we'll see if that has any traction. Obviously, everyone's going to be looking for wording for forward guidance. And then we have, I think Friday is going to be, fairly interesting with PCE durable goods. So I think just Monday is just a few speakers. We'll see if that happens. And then all the drama, of course, from the debt ceiling will come out. The reason I think it would be bearish on that, it'd be bearish for the banks because the liquidity, flash liquidity for the funding comes from bond auctions, and those bonds have to be purchased by someone, and typically that's mandatory by the banks. And actually, the banks buying those long-term treasuries is what got them in trouble and why some of them have failed. So that's what I'm keeping my eye out for. I think that everyone's so bullish for this, agreement. I think that maybe it's not as bullish as we think it is. But again, that's just my theory. And anyway. Happy Sunday. If you're listening to this, happy Monday morning. I will not, obviously, I'm doing this because I won't be here Monday morning, but I will be in the room later that day. So we'll be keeping an eye on the overnight to see what happens. And anyway, hope you had a wonderful weekend, and we'll have a great week next week.